Folks, how is it going today, guys? Happy Thanksgiving. All right. So, today, what I wanted to do is walk through Goldman Sachs' latest distributions, their distributions for the end of November or early December. I cannot wait to show you their distributions and their distribution schedule, which has been very successful over the past couple of years, really. And so, let's jump right into Goldman's GPIC and GPIX distributions. All right, guys. So first and foremost, guys, I will link this sheets that we'll walk through today in the Patreon community. If you want access to the Patreon community, you can see the link in my description for the link to the Patreon. I can't thank you enough for signing up. It's $5 a month for the access to all the calculators, or $15 a month. Should you want to do a quick financial chat, and I'm gonna keep adding new features to the Patreon community, potentially a Discord for the Patreon members, and more to come on that. But let's just jump right into our Goldman Sachs payouts distribution schedule or calculator. And it looks to help you understand the payouts per month from what Goldman Sachs key covered call products, GPIC and GPIX, have done over the past year, essentially for 2025. All right. So let's look at the calculator and look at how this works. All right. So for GPIC, which is the Nasdaq 100 covered call, and then GPIX is the S&P 500 covered call from Goldman Sachs. What you have to do is effectively just add in your share amount. All right. So if you have 1,000 shares, you add that in. If you have 500 shares, you add that in. If you have 5,000 shares, you add it in, and then all the payouts per month would get calculated. Now, do keep in mind that the price does fluctuate. So this is taking today's price, and the payouts will fluctuate and be a little varied relative to what you have seen, because that price would have been different at that time. But for a simulation purpose, we're going to use today's price. All right. And so for this example, we have 1,500 shares of GPIC and 1,500 shares of GPIX. Their current price for GPIC is $53. The current value for that amount is going to be 80K. And their year-to-date price return for GPIC has been about 9%, guys. So they have price appreciated really, really great, alongside offering a great yield and a great distribution. And that's why I really love Goldman Sachs and really love their product offerings for both GPIX and GPIC, is you get that great balance between income and appreciation. And I'm going to show you an example of the distribution chart to show why I think that's a great strategy in the long run. All right, but looking at their distributions, guys, they've stayed within the 40-cent range, and they've had pretty much their strongest distribution for GPIC year to date, in line with November. So end of November or early December, payout was 47 cents for GPIC. Very, very successful stuff. And their growth, right? Their growth of their distribution in December relative to the beginning of the year is 9%, 8.55%. So they're growing their payouts. Now, of course, it fluctuates. Sometimes the payouts are weaker, sometimes they're stronger. But versus January of 2025, we have a 9% growth on this payout, which is great to see. And their year to date and trailing 12-month yield is about 10% for GPIC, guys. All right, should you have invested, or should you have the value of 80K with this 1,500 shares, your total payout for the year so far would have been 7 to 8K. All right, 7 to 8K. Yes, we have potentially one more payout to go at the end of December or early January for the year, but the total payout was 8 to 7K. 10% yield on this, very healthy. And then the total return, you're pretty much adding up the price return plus the trailing 12-month yield. We have 18.6%. So that's an amazing yield, an amazing structure, and you have the combination, right? You have a great yield, 10% yield plus a 9% price return. You're seeing greens in your portfolio alongside a healthy distribution rate. So really, I have no complaints there. Really good stuff from GPIX. Similarly with GPIX, 37-cent payout, which is right in line with what we've been seeing in October, November, and December. So 37-cent payout. on 1,500 shares at an 80K value, you would have had a payout of $561 for the month. And their year-to-date price return from a price return standpoint is 7.28% for GPIC. So again, really good distribution and good price return, price appreciation. All right. And so they've also grown their payouts since January, right? 37 cent versus 35 cents. So that's a 7% growth since January. Their year to date or trailing 12-month yield is 8%. Their total return is going to be 15%, assuming we add 7% plus the yield, the year-to-date yield of 8%. It's about a 15.27% total return for the S&P 500 covered call structure with GPIX from Goldman Sachs. Should you have invested the 80K here, or invested 50 or gotten 1,500 shares of it, you would have seen a payout of 6K for the year so far. All right, and so with the combo here, we would have seen 14K in total payouts for the year on about what do we have? 160K in market value. All right, 160K in market value for a year-to-date yield of around 9%. All right, guys. So really healthy stuff from Goldman Sachs, and I want to just show you guys the dividend growth and the payout growth over time with Goldman Sachs. All right, guys. So we are here at GPIX dividend chart for the past 5 years, and you can see this steady growth in their payouts over time, right? Yes, they had a dip in 2025 April, and that's kind of expected just due to what happened then. But they've been able to consistently grow the payout amount over the past 5 years, and that's exactly what I want to see with a cover call structure. We want to be able to continually grow that payout amount. And certainly like the market is at pretty much all-time highs. So if we can correlate those payout amounts with market appreciation, that's what we want to see, right? There's more NAV in this asset. They have the ability to generate higher premiums and pay out with also better returns, right? So that's what we want to see. We do expect that on downturns, the market goes down, the payouts would also come down. The premiums and the payouts will come down, but as the market continues to pick back up, those distributions, those payouts continue to rise alongside a growing NAV, higher payouts, right? We want to see growth in the payouts, the yield. Certainly it's nice to have a yield in and around 8, 9, 10%. I don't care for a 15, 20% yield with a much lower payout, right? I want to stay within that range. So I love what GPIC is doing. I think it's growing to be probably my favorite covered call ETF out there. Now, of course, this is all my advice. This is of course my opinion. This is not financial advice. I'm not a financial advisor, but this is becoming one of my favorite ETFs because of that nice combination. Probably the best combination I've seen from income and growth, guys. But let me know what you guys think. Let me know in the comments below, guys. Sub to the channel. All the best and cheers.